Hello everyone, a very good morning, good afternoon, and good evening to all of the viewers. This is your host Vaibhav. In today's session of correlation regression, we have the lot of the developments to cover. And after the release of non-farm payroll data just a while back, we have already seen sharp moves in various financial instruments across the board if we consider the forex markets, the commodity segment, and not to forget the equity and the treasury markets as well. There has been sharp moves in almost all of these segments of the financial market. So this is an interesting day, but since we don't really have much time left for the weekend closure, we will have to trade cautiously from here onwards, as I said, because there are two significant factors at play. That big moves have already happened, and that kinds of has to be considered as a foregone opportunity. And now that we have to chart a course moving forward, first we have to factor in the development so far, and then we also have to take in the time limit factor. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. So this is the chart for the Euro USD, and as you can see, we had the decline of almost 100 pips after the release of non-farm payroll data. The dollar has gained the momentum and it has risen across the board. If we compare the Euro USD chart to any other major currency against the dollar, you will see a equally sharp move. Of course, the magnitude is going to vary, but the direction, the trajectory is almost similar for almost all these currency pairs. Now, if we have to make sense of this price move and what is the next course of action, first we will have to consider where the Euro USD stands after this release, and it is lower if we look at this today's trade chart where it was consolidating in a very narrow range in anticipation of the non-farm payroll data, and after that this sharp move happened. And now if we place it in context of the prior run, here, this is more of an correction at the moment, but we will have to, of course, wait for next couple of hours to see how things unfold moving forward, and that is going to help us in defining the next course of action. So here is now trading below the 12-hour as well as the 24 hours moving average price. So in near term, the momentum has shifted to the bearishness. The earlier bullish tendency is almost gone conclusion now, and we will have to concentrate our energy and our efforts on figuring out the opportunities to go short unless there is any significant reversal and the euro USD climbs back above 1.05. Only in that scenario we will have to make a new assessment, but I think as long as it holds below or consolidates closer to this range, or even if there is some move on the upper side, but if it is contained below 1.05, then for next couple of sessions in today's session also we will have to keep the stance on the bearish side. Now we have to of course figure out the opportunities, and if we have to look at the relative strength and weakness, we will have to take these factors in mind, where we will have to look at the move magnitude of the move as well. And since the timing is almost going to be similar, so that is going to be a key criterion while defining the strength and relative weakness of various currencies. So here at the for Euro USD, we had a decline which is more than 100 pips, and even now the momentum is on the bearish side. So we have to play with the momentum. But I should remind once more, as I said in my introductory remarks also, it is going to be a bit difficult a task to figure out the new opportunities to trade at this moment, since we have already seen this big move. So that is something which we have to keep in mind, and of course not to forget the Friday's early close. Only US session timing is left, and after that we will be winding up our business for next 2 days. So that will be a fun time. Now let's see who has gained or who has lost and by what magnitude. Let's start with the AUD USD. For AUD USD, of course, the trajectory is similar. The only difference is in terms of the magnitude. In percentage terms, I think the decline is almost similar. But if we go back in time and look at its charting throughout the day, it was trading below these days low for almost 4 to 5 hours before the release of data. And once the release came in, it gave up almost all of the gains it had accumulated in last two trading sessions. If you go back to the 30th November, on that day we had the breach on the upper side above these prior consolidation levels, and that's where we are seeing the AUD USD back again. So this is an interesting phenomena, and we will have to be cautious here and figure out the opportunities. But first, we will have to let it consolidate first, and maybe after due consolidation, we can of course think about the new opportunities to go around with. Now, comparing it with the Euro USD charting, I think earlier in the day also, and to some extent, even if we go by simply the percentage point of view, we have weakness in the AUD compared to the euro. So that is something which we have to keep in mind moving ahead. So the first preference for any short sell trade will have to be with the AUD in comparison to the euro. But for that, for figuring out which instrument to trade and which instrument to ignore, we will have to get the comparison done for almost all these USD crosses, major USD crosses, and let's consider the GBP in that spirit. For GBP, the momentum has been sharply on the higher side. If we go back to its chart for last couple of days, it has gained the most in comparison with other currencies. And as I said, if we simply remember the AUD USD chart for last 2 3 days, after this decline, it is back to these prior consolidation level. But if we look at the GBP's chart, it is still above these prior consolidation levels. So in terms of decline also, the GBP is at least to some extent it is able to hold on to these prior gains. So in that context, we have to give first preference to the AUD for shorting in in comparison to the Euro USD or GBP USD, as the momentum is looking immediately bearish. Here, if we look at its absolute decline in pips, there is almost 140, 130 to 140 pips, but in percentage term, of course, it is not going to be much different from the AUD. But if we look at its prior price formation, even prior to the release, it was not far off from the day's high. So that is one critical factor also. Now, let's consider what's the development for the NZD USD. NZD USD is also in strong decline, and here it is seemingly in lead in comparison to the AUD USD. If we look at its decline, there is a lot more compared to the AUD. Now let's consider its larger time frame chart. But for hourly, 12 hourly, as well as for 24 hourly average price, it is still holding on to some of the prior gains. So in that context, I think the relative weakness is with the AUD. So we will still have to give preference to the AUD if we keep in mind all these currency crosses which we have seen so far. But we are not done yet. We have to also consider the USD CAD, USD CHF, and USD JPY before we can make our mind. For the USD CAD, the gains were there, but it has not been able to sustain those gains. And right now, the CAD is trying to get back to where it was prior to the release, and even in these pips, if you count this move, it is a lot less compared to other currency crosses. So I think the CAD is still holding well, and it is looking stronger in its movement against the dollar compared to all other major currencies. As I said, the weakness, the most bearish of the other major currencies is AUD, but I think the strongest in this movement is CAD so far, which we have seen five currency crosses, and the CAD can be the first preference if we see a turnaround of sort and if we expect dollar to not gain further strength and a possible reversal also. So first we will have to wait for a couple of hours and see how things consolidate, and only after that we will be in a position to make the fresh judgment. But for any continuation of the trend in these aftermath of the non-farm payroll release, we will have the AUD USD to trade with, and if we don't really expect this spurt in the dollar strength to last much longer, in that scenario, I think the CAD will have to be given the first preference, looking at its relative strength. For the USD CHF, the gains have been substantial, and of course, in comparison to the CAD, it is looking much weaker, but it is somewhere in the middle of the pack. And let's consider its price move in terms of its movement for this week, and it is now about this 12-hour as well as 24-hour moving average price. So in that context, it is of course bearish in near term. In immediate aftermath, it is looking bearish, and it is not totally convincing to trade with. And still we have our choice to be finalized, and for that let's consider the USD CAD's movement on the daily time frame. It is holding well above the 24 as well as 12-hour moving average price. And let's now go to the USD JPY. After this substantial decline, the USD JPY has also turned the corner. And if we look at the today's low, which was there at 133.6, the gains are quite solid, almost 200 pips. And let's see if it is able to hold on to those gains or not. So far, it is looking like that it is going to be able to hold on to these gains. And it looks like from the this chart that even prior to the release of the non-farm payroll data, USD JPY, by that I mean JPY was one of the weakest currency against the dollar after making this low at 10:50 GMT, and after that release, it jumped higher by almost 200 points. So I think here, if we expect this upward momentum to continue for next couple of hours, then the JPY is even weaker, seemingly weaker than the AUD. So far, I was in favor of shorting the AUD USD ahead of other currencies. But now, looking at the USD JPY chart, I think we can change our mind. And if we expect the dollar strength to remain in next couple of hours till the US trading session, then the USD JPY is something to look at and track for any trade to be taken in continuation of this current momentum. And for against the momentum, the USD CAD will be a better bet, as it is showing the strength. The CAD is showing the strength against the dollar. If we look at this spurt on the higher side, it was lesser in magnitude, and after that, the USD has not really been able to hold on to those gains which were seen in the first 5 minutes. So, keeping all these in context, I think we will have to keep a track of the USD CAD for possible reversal also. But in any scenario, next couple of hours, at least 1 to 2 hours, are going to be crucial. And once we get to the start of the North American trading session, of course, the initial momentum, cash inflow and outflow is also going to give us a guiding hand to trade with. So let's wait for at least US Open start, US session start, and we will have further clarity in this trading scenario. Now let's shift our attention to the equity segment. Here, if we look at the Dow Jones Industrial Average chart, it has declined more than 1 percentage point, closer to 1.5 percentage point, and let's see where it stands in terms of its last 24-hour moving average price. It had gone slightly bearish after making high at 34,600 in yesterday's session. from there on we saw this reversal of more than 1 percentage point, and then it had gone sideways. Prior to the release, the Dow Jones Industrial Average futures were trading in a very narrow range, so it was very difficult to make a judgment. But now that we have got the clarity, and it looks like that the Dow Jones has taken a bearish turn, as it is in the process of wiping out almost all of the gains after this 30th November rally on the higher side. Here we will have to go with the flow and keep looking for the opportunities to go short in the equity index, and for that of course the immediate swing high, the day's high, going to play a crucial role. So here I would suggest that we allow it some more time to consolidate, and as the immediate momentum is bearish, we will do well to keep that in mind and keep looking for the opportunities to keep a short sell trade, go for a short sell trade whenever situation warrants for the fresh entry when we have the risk and reward ratio in our favor. Now, if we have to decide which one is the strongest and which one is the weakest of these three key equity indices for the United States, of course, we will have to look at the prior price action also prior to the release of the non-farm payroll data. And S&P 500 was trading bit stronger compared to the Dow Jones Industrial Average, which you can figure out simply by looking at this chart. And if we break the chart on the lower time frame, here it was making this 4 hourly high just prior to the release. And if we look at the Dow Jones Industrial Average chart, it was slightly lower compared to the prior high, the day's high established at 34,388. And now the price is inching closer to the last 1 hour moving average price, but as long as it is well below this average price of 24, we will have to keep our sentiments on the bearish side. But of course, since there has been this big move, we have to be careful while taking the new trades as well. Now that we got the lead in the Dow Jones Industrial Average while looking for the bearish trade, if we want to confirm if the Dow Jones is the weakest one, we will of course have to first take a final look on the Nasdaq's charting pattern as well. For Nasdaq, it is more in line with the price action of the S&P 500. So looking at the prior price action, we can make an assessment that Dow Jones Industrial Average is the most bearish of these all three equity indices for the United States. And now if we have to go back in time and look at the charting pattern for last couple of days, in that context also, the Nasdaq has been, as of now, it has been able to hold on to some of the prior gains. And if we look at the comparative chart of the Dow Jones has almost gotten closer to where it was on the 13th November prior to Mr. Powell's statement regarding the slowing down of the pace of monetary policy tightening, which had given the impetus to equity segment, equity markets to move on the higher side. And similar scenario also played out in major currencies against the dollar. But now the sentiment seems to have reversed, and we have almost a uniform decline across the board in equity as well as in currencies, major currencies trading against the dollar. Let's consider the price developments for the European segment. And guys, if you have any query or any idea, you can write to me in the feedback, so we can discuss about any specific currency cross or equity index. Now, looking at the DAX charting, here the DAX was comparatively stronger compared to the Dow Jones Industrial Average, S&P 500, and the Nasdaq. If we look at its price formation, even prior to the release of the non-farm payroll data, it had gained almost more than 1 percentage point, and after the release, we saw this decline. But right now, it has been able to recover the lost ground to some extent, if not to full extent, and it is now almost midway to this decline. So this is an interesting formation, and if we look at these 12-hour moving price crossing above 24, so that is also something to keep in mind. So here we have the clear bearish tendency prevalent in the US equity segment and Dow Jones in particular. But for the DAX, things are not really looking that bearish. So this is a instrument which you can shortlist for possible trend reversal, for possible reversal in the current price trajectory, which is tilted on the bearish side. But if you get to see consolidation for next couple of hours and no further decline on the lower side, in that scenario, of course, the DX can also be considered for going long instead of going short. Let's consider the developments for the FTSE 100. FTSE 100 is a lot more bearish compared to the DX, and it is more in line with the price trajectory of the US equity indices. Now let's consider its charting on the lower time frame, the range. It had also gone on to make this 4 hourly high. So in that context, it is not really that much weaker compared to the Dow Jones. We still have the lead with the Dow Jones Industrial Average. And before we wind up the session, let's consider the France CAC 40. I think it is not included. I will add it from CFD indices. All right, we got it. Here it comes. The France is also having the mixed sentiments prevailing. Here earlier in the day it was climbing on the higher side, then it gave up almost all of those gains. But right now it has also been able to reverse the course after the initial decline, and is more in line with the price trajectory of the DA. So this is the middle of the road instrument. It is not showing much clarity, so it is better to trade with the financial instrument in which there is a lot more conviction in the price move on bearish side. So there we have the lead in the Dow Jones Industrial Average to go short. But in the scenario of a possible reversal, we will have the DX to trade with in a scenario where we change our outlook from bearish to bullish. And as we saw in the case of currencies, we have the CAD to be a strongest of the currency against the dollar, and we have JPY to be the weakest currency against the dollar. So you have to trade keeping these factors in mind if you want to go with the flow and go strong, go long with the dollar, then AUD USD or USD JPY can be considered. But if you are not really convinced with the continuation of this spurred initial spurt after the release of NFP, you can turn to the currency which is showing the highest strength, more strength in comparison to other currencies, and almost now it is inching back towards to where it was prior to the release. That is something to keep in mind, and then plan our trades accordingly. So, guys and girls, this is all from my side for today's session. If any of you have any query or any idea to share, you can write back to me in the feedback section, and I would be more than happy to take the discussion forward. So, here I am wrapping up the session, and I will be back on the Monday after the weekend. So, let's have fun over the weekend. See you on Monday, guys. Thank you all for joining in. Goodbye.